Let me ask you something. If you just purchased the house here in San Antonio for $125,000, invested $50,000 in repairs into the house, and resold it for $225,000 in 6 months, after closing costs, holding costs, seller concessions, commissions, let's say you clear $18,000. That's a 10% return on your cash investment. It sounds solid, right? But what if I were to tell you that within those 6 months, that Bitcoin returned 62%, gold returned 60%, and silver returned 65%? The question you'd be asking yourself is, was real estate the best investment, or should I have looked elsewhere for returns? I'm Gabriel Esparza, and at FlipperMap, we track a majority of the investment property transactions here in San Antonio, and we're constantly looking to see where active investors are purchasing all across the city. Lately, I've been asked questions like, Gabe, should I be looking at crypto? Should I be buying gold instead of houses? Today, I'm going to break down exactly what's happening in the financial markets, and more importantly, what it means for you and your real estate business here in San Antonio. All right, let's start with gold and silver, because what's happening in these markets is absolutely wild. In the last couple days, gold has surpassed $4,300 an ounce. Silver is trading at over $52 an ounce. These are not small moves. Gold is up 60% year over year, and silver is up over 66%. These are seismic shifts. Now you might be thinking, so what? I don't invest in gold bars. I want to invest in real estate. But here's why you should care. Every dollar your private money lender has, every dollar you have, is all competing for the best return right now. And gold and silver are screaming at people to buy them. So why? 3 big reasons. The dollar is losing purchasing power. Your grocery bill is up, your insurance is up, your property taxes right here in San Antonio, yeah, they're up. Even though the government says inflation is only 2.6%, in the real world, it feels like at least quadruple that. So if you're holding cash right now, it feels a lot like holding ice cubes in the Texas sun. Number 2, central banks are buying gold by the ton. China, India, Turkey, Poland, they bought 900 tons in 2024 alone. When the people who print money are buying gold, that tells you something. Number 3, supply and demand. The world used 1.21 billion ounces of silver in 2024, but only produced 1.03 billion, leaving a 180 million ounce shortage. Less supply, more demand, price goes up. And here's the kicker. Silver doesn't just sit in vaults like gold. It's in solar panels, electric vehicles, electronics, medical equipment. The green energy transition is eating up silver like crazy. All right, now let's talk about cryptocurrency. Bitcoin just hit $110,000. If you put $100,000 into Bitcoin at the beginning of 2024, you'd be sitting on $162,000 right now. That's a 62% return in 1 year. Ethereum is sitting just under $4,000, up 54% over the same time period. Now, I know what you may be thinking. Crypto, that's just gambling. Well, Wall Street doesn't think that anymore. So what changed? 3 major things. First, Wall Street showed up. In January 2024, the SEC approved Bitcoin ETFs from BlackRock, Fidelity, and all the big institutions. Bitcoin ETFs brought in $1.9 billion in the first week of January 2025 alone. That's not kids on Reddit anymore. That's pension funds. That's university endowments. That's serious money taking crypto seriously. Second, the Bitcoin halving. Every 4 years, the amount of Bitcoin created gets cut in half. It happened in April of 2024. Think of it like this. Imagine if the oil supply got cut in half every 4 years, but demand stayed the same or went up. What would happen to prices? It's pretty clear. They would skyrocket. Same logic with Bitcoin. And historically, every time this happens, a bull run follows 12 to 18 months after. Third, political clarity. Trump won the election and he's pro-crypto. Regulations are getting clearer. When Wall Street sees clear rules, money flows in. Ethereum is up 54%. That's where all the decentralized finance action happens. Think of Bitcoin like digital gold, and Ethereum is like the internet, where all financial apps are being built, but the currencies that drive this economy are tokens and coins, not US dollars. The point is, crypto isn't fringe anymore. It's become mainstream, and that's moving billions of dollars that used to go into traditional investments elsewhere. Now here's the part where it all connects, and this is the part most people don't understand. Gold, silver, crypto, they're not booming in a vacuum. They're booming because of what's happening with the US dollar. And if you understand this, you'll understand everything that's happening right now in the investment world. When you buy a flip in San Antonio, you're betting on the San Antonio economy. When people invest in gold or crypto, they're betting on the US dollar losing value. Here's what's happening. For the last 2 years, the Federal Reserve raised interest rates aggressively to fight inflation. They went from basically 0% to 5.5%. Higher interest rates made the US dollar stronger because foreign investors wanted US bonds paying 5% interest. But starting in September 2024, the Fed cut rates 3 times. We went from 5.5% down to 4.2.5%. Lower interest rates means a weaker dollar. And when the dollar weakens, money flows out of dollars and into alternatives like gold, silver, and crypto. But here's the problem, and this is the worst possible scenario for the dollar. Inflation is still above the Fed's 2% target. It's sitting at 2.9%, or so they say. It won't come down. So you've got the scenario where inflation is eating away at the dollar, but the economy is still growing. So the Fed can't raise rates without risking a recession. The Fed is stuck. They're trying to thread the needle between too much inflation and too much economic pain. But investors see this and think the dollar is trapped. Smart money flows to hard assets like gold, silver, crypto, and yes, real estate. Okay, so if gold is up 60%, Bitcoin is 62%, silver 65%, and your flips are averaging 10%, does that mean you should quit real estate and just buy crypto? Maybe.
So why were you late? Watch your mouth.
But before you do, let's cover some things that real estate gives you that these other investments don't. Number 1, safe, accessible leverage. Now, yes, you can use leverage in crypto. You can trade at Bitcoin at 10x, 50x, even 100x leverage. You can do it all from your phone in Coinbase now. But here's the problem. One bad day, one flash crash, and you're liquidated. Your entire position wiped out in seconds. I've seen firsthand thousands of my own money get wiped from trying to play around with crypto leverage. After several losses, I don't touch leverage in crypto anymore. Real estate leverage is completely different. When you use hard money in San Antonio and you put $30,000 into a property, you get controlling interest of that property that's worth substantially more than what you put into it. But the loan is secured by a physical asset. The bank can't liquidate your house overnight just because real estate prices drop 15% in the neighborhood surrounding that house that you bought. You have time, you have control. And most importantly, banks, credit unions, and private money lenders are very eager to give out that leverage because the asset they're loaning on is tangible. Try walking into a bank and asking for a loan to buy Bitcoin on margin. They'll probably laugh you out the building. They're not going to cut you a check. But if you tell them you're buying a flip in an established neighborhood like Castle Hills, and you show them your clear exit strategy, they're probably going to give you a loan. Your 10% ROI in the example I laid out, well, when you factor hard money, that cash on cash return can jump pretty substantially. Number 2, stable, predictable cash flow. Now, yes, you can earn a yield on your crypto these days. You can stake Ethereum and Solana and earn a yield on that. Or you can even lend it out on popular platforms like Aave and earn 4%, 5% APY. But here's the difference. The crypto yield depends on protocol risk, smart contract risk, and platform solvency. Remember when FTX collapsed and billions of dollars that were earning yield just disappeared overnight? That's a reality. That can happen to you. Gold still produces nothing. It just sits in a vault. But real estate cash flow, that's $1,600 a month a tenant is paying you every month. Your rental property can't get hacked. It doesn't just disappear. Sure, barring something catastrophic like a fire, which is why we have insurance, what other things could happen? Well, could you have to evict a tenant? Yes, that's a possibility. but most tenants want a roof over their head, so for the majority of the time, they're probably not going to miss rent. But just like any other investment, real estate does have risk, but it's manageable, predictable risk. Now, when you flip a house, you're creating value. You're buying distressed, you're forcing appreciation, and you're selling retail, right? You're doing a renovation to do all these things and push the market for that house in a certain neighborhood. You're not just hoping the market goes up. You're actively creating your profit. Number 3, in real estate, you can control the outcome. With crypto, you're at the mercy of the market. But with real estate, if you buy right, renovate smart, and sell for the right price, you control whether you make money. That's why I'm still in real estate. Look, the smart play isn't choosing one over the other or just putting all your eggs in one basket necessarily. Diversification is a smart way to essentially help you mitigate the risk and capture the upside across all these investment vehicles. Now, here's the bottom line for San Antonio investors. Real estate here is still a smart play. We've got population growth, people moving in from expensive markets like New York and California. We've got job growth, the military's here, and we have relatively affordable housing compared to other Texas markets like Austin and Dallas. But you need to know what you're competing against and have some understanding of what's going on in the market. When gold is up 60%, Bitcoin is up, silver's up, your money has options. Where are you going to park your money? So make your deals bulletproof, know your numbers cold, understand your competition. And if you want to see how your real estate deals stack up against some of the investment vehicles that we discussed in this video, we built a tool for that on FlipperMap. It's called the Investment Analysis Tool. You plug your deal numbers in, and it shows you exactly how your flip compares to stocks, crypto, gold, and bonds with actual market data. I'm Gabriel Esparza with FlipperMap. Now, let's go make some smart moves.